If you think home prices are falling in the Grand Rapids area, you'd be wrong. Welcome to the Grand Rapids, Michigan, Kent County residential real estate market update with data through August 2022. My name is Rodney Constable. I'm a realtor with 616 Realty out of Grand Rapids, Michigan. Year over year, home prices are up 13.8% in the Grand Rapids area, with the average home selling for $352,378. 1 year ago, the average home was selling for $309,530. For years, I've heard people saying things like home prices can't continue to go up. Well, when I hear things like that, I think about the input costs to building a home. And some of the major input costs to building a home are land, labor, materials, and regulatory costs. So if somebody thinks that home prices cannot continue to rise in the future, what they're basically saying is that land is going to get cheaper and more plentiful. Labor is going to get cheaper and more plentiful. Materials are going to get cheaper and more plentiful. And the government's going to make regulatory costs of building a house cheaper and easier. And guys, when we just think about these four input costs, land, labor, materials, and regulatory costs, do we really think that any of these input costs to building a home are going to fall in the future? I doubt it. So if land, labor, materials, and regulatory costs are going to continue to go up, then home prices probably will continue to rise in the future as well. The average home is selling after being on the market for just 13 days. When we compare that to the inventory of unsold homes, we can see that the unsold homes have been on the market for an average of 50 days. What these two data points tell us is that if a home is properly priced, it will sell in a relatively short period of time, right now in about 2 weeks. However, if a home is not properly priced for its location, condition, and amenities, it will stay on the market for an extended period of time, right now just under 2 months. Next, let's take a look at year-to-date new listings versus the same period 1 year ago. So again, we're looking at the first 8 months of calendar year 2022 and comparing that data to the first 8 months of calendar year 2021. And in this category, we can see that we're down 1.35%. Now, when we look at this data in a numerical format and then also look at the last 7 years of information, what we can see is that so far through the end of August, we have had 6,991 listings come to market in Kent County versus 7,087 listings for the first 8 months of calendar year 2021. So we are down 96 listings or 1.35% versus where we were last year. However, if we go to the bottom of this chart and look at 2016 and then work our way up, we can see a couple of things. First off, in 2016, 8,827 listings for the first 8 months of the year. And when you compare that to where we're at right now, what we can see is that we're down at 1,830 listings or 20.80%, guys. Almost 21% fewer listings so far for the first 8 months of calendar year 2022 versus where we were in 2016. The other thing we can see, though, is if we start in 2016 and work our way up, you can see that over the period of this 7 years, the number of new listings coming to market continues to drop. And so this is one of many things, right, as well as land, labor, materials, regulatory cost. All of this is contributing to the rapid increase in home prices that we've seen in the Grand Rapids area over the last, decade plus. And guys, it's unlikely that any of this is going to change anytime soon. Okay, so just, but stay with the rest of the video. But I'm telling you, and I've been telling people for years, right? People have been arguing with me about this. But guys, there are so many things, right, that are contributing to these rising housing prices. And it doesn't look like any of these are going to go away anytime soon, any of these contributing factors. Now, I am not saying we're going to continue to see, double-digit price increases year over year. It could happen. But to think that home prices won't continue to rise in the Grand Rapids area over the next, 2, 3, 4, 5, 10 years, I think we're being unrealistic about with the data, right? It just, everything says that home prices will continue to rise in the Grand Rapids area for the foreseeable future. Next, let's take a look at year-to-date closed transactions versus the same period 1 year ago. And in this category, we are down 7.57%. Now, this is one of those things where people say, and again, it's how's the housing market? Well, the housing market is slowing down. Well, okay, there's perhaps less listings coming to the market. There's a few less closings, but it doesn't mean that home prices aren't continuing to go up. So we have to make sure we're being very, very clear about the question that we're asking and, of course, the answer that we're giving, right? So are there fewer homes selling? Yes, part of it is because there's fewer homes coming to market, and another part of that equation is that home prices continue to rise. And so for some people, it becomes, housing prices are at a point where they can't afford it, right? So they're going to be forced to rent. But if more homes came to market, and that might slow down the rate of appreciation, it would allow for more homes to be sold to more people. So hopefully that made sense. It's all just part of economics, guys. And remember, I'm a former financial advisor, spent decades in the financial services industry, so I come at this from a little bit of a different perspective than perhaps everybody else does. But it's important to understand this stuff, right? Which is why I go so deep into the data every month. And by the way, if you haven't already subscribed to the channel, guys, come on, please. I mean, for both of us, right? Subscribe to the channel, hit the bell so you get the notifications when I put out a new video. I put out at least one video like this a month. And there's a lot of great information on this channel. So make sure you subscribe and stay up on the information, right? So you're dealing with the facts, and that we can help, tamp down some of the emotion, right? People have a lot of opinions when it comes to real estate and economics, but let's stick with the facts, which is what I do. I stick to the facts. So with that said, let's move on to year-to-date closed transactions in the numerical format. So again, we just looked at the fact that we're down 7.57%. And when we're looking at the number of closed transactions for the first 8 months of the year, Kent County, 5,578 compared to 6,035 for last year for the first 8 months. So that's where we're down 457 closed transactions, or down 7.57%. So again, I want to be fair about this. Is the real estate market slowing down here? Well, yeah, the number of transactions is slowing down. The number of listings coming to market is slowing down, but that doesn't mean home prices are falling. Okay, so let's go down to the bottom of this chart, 2016, start there, work our way up. Same thing we did with the listed homes, right, to kind of compare the data, see where things are at. And I like to look at trends. It's important to understand the trends, trends in economics, trends in the stock market, trends in the real estate market. And remember, guys, one of the differences between the stock market and real estate is you have to look at local real estate data, right? Where the stock market is, the entire nation or globe. A share of Apple doesn't sell, it's the same price in Grand Rapids, in Detroit, in Chicago, in New York, in Los Angeles, in Dallas. Everybody pays, if you're going to buy right at that same second, everybody's going to pay the same for a share of Apple, Microsoft, whatever it may be. However, a 3-bedroom, 2.5-bath ranch built in 1970, with 1,500 square feet and an unfinished basement, is going to sell for a drastically different price, whether you're looking at Grand Rapids, Detroit, Chicago, Des Moines, Iowa, Los Angeles, New York, Dallas, whatever. You get the point, okay? So that's where, again, real estate is different, and this is why we have to be experts on our local Kent County real estate, because, the things that are affecting real estate in other areas of the country don't necessarily positively or negatively affect the real estate in our area. And so we are talking about Kent County data here and staying specifically focused on that information. So 2016, we can see there were 6,736 closed transactions for the first 8 months of the year. And again, work our way up. You can see that 2022, by far the lowest number of closed transactions. Okay, so yes, from an activity standpoint, there are fewer homes selling, but again, that does not mean home prices are falling. Okay, there's, for many, many reasons, there's fewer homes coming to market, there's fewer transactions being done. But again, I want you guys to really understand that doesn't mean home prices are falling. Okay, as a matter of fact, it is going to contribute, right, to the rising home prices, because if anybody really wants a home and can afford it, well, they're probably going to have to pay more for it than they did last year, and we've already seen that, right, up well over 13% year over year, and again, it doesn't look like that's going to change anytime soon. But when we again see this trend, right, we can see the number of transactions year over year slowing down, and where we're at in 2022 is actually even lower than where we were at in 2020 during the COVID lockdown. Okay, so yes, there's fewer transactions. I'm going to back up a couple slides here. There's fewer homes coming to the market. I mean, look at, in 2020 there was 7,439 new listings, and now we're at 6,991. By far the lowest number of listed homes that we've seen in Kent County over the last 7 years. And of course, when there's fewer listings, there's probably going to be fewer transactions, right? So all of this is tied together. All right, so let's move on to the average months of inventory in Kent County. Now, in this category, I have more data available to me, so I'm able to run this data back to 2013. So we have 10 years of data, where on the previous charts we only had 7 years, because that's all of the data I have available to me. Now, in 2022, we can see that there's been on average 0.7 months of inventory. That's about 21 plus or minus days, depending on whether it's a 30-day, 31-day month, or month of February, 28 days, 29 days, depending on the year. But the bottom line is, guys, we're running about 0.7 months of inventory. Last year in 2021, it was 0.6. And when we go down here, we can see on this 10 years of data, the highest inventory that we've had in the last decade in Kent County has been 2.3 months. 2.3 months, guys. That is really low inventory in and of itself. And even though the inventory level has ticked up a little bit, 1/10, right, of a point, from 0.6 to 0.7, so about 3 days more inventory so far right now in 2022 than what we had in 2021, it is still super low inventory, and it's about a third of what our highest year has been over the last decade. Okay, so we're running 0.7 months right now. In 2014, we were running 2.3, so right now, again, about a third. Even at 2.3 months of inventory, that is super low inventory. And now let's take a look at why that is so important. So why does inventory matter? Well, as we can see here, if you have between 1 and 2 months of inventory, you probably are going to experience double-digit price appreciation on homes. And that is exactly what we have seen for many years here in the Grand Rapids area. If you're running between 3 and 4 months of inventory, you would generally experience single-digit price appreciation. If the inventory built to where you had between 5 and 6 months of inventory, this is more of a normal, balanced, or neutral market where you might experience some price appreciation, but it would more than likely be in the low single digits. And if you're under 5 to 6 months of inventory, this is considered a seller's market, and that's exactly what we have seen for many years here in Grand Rapids. If you're over 6 months of inventory, this is considered a buyer's market. And if your inventory built to between 7 and 8 months, that's when you would most likely experience single-digit price depreciation. And then if the inventory built to 9 months plus, that's when you would likely see double-digit price depreciation. So 7 to 8 months of inventory, single-digit price depreciation, 9 months plus, that's when we start to get into double-digit price depreciation. Are you looking for a realtor you can trust? If so, look no further. When you are ready, let me put my decades of sales and business experience to work for you. Call me directly at 616-258-4782 to discuss your situation or to just talk about real estate. I look forward to helping you succeed. Once again, that phone number is 616-258-4782.